Hi, and welcome to this week's look at the biggest stories or the most important stories that are affecting the markets so far. This week, we're going to take a look at the following topics. We've got some European indices performing really rather well in the last few days and weeks. We're also going to take a look at what's been happening with the Australian dollar and their inflation figures. Obviously, we can't have a week without talking about inflation in one way or another. Then we're going to swap to commodities, have a look at what's been going on with Brent crude oil, and we'll finish off with some pretty good news for Amazon stock and in fact how well that's been performing in the last few days. So, to start, European stock markets up on a roll. Now, there's been lots of talk recently about how the US economy is outperforming those from the Eurozone or European economies and the UK economy. We've basically seen dollar up, euro and sterling both falling. But you can't write off the European economy as second fiddle purely on the grounds of a bit of strength in the US dollar, some pretty good form recently in terms of tech stocks, and some mediocre notes from the Fed, where they basically reiterated that there probably won't be any rate cuts in the short term. So that's not enough to write it off. And in fact, over the past few weeks, European stocks have been increasing in value to the extent that some indices have set all-time highs, one of those being the CAC 40 or the French 40. That closed Monday at 79.60 spot 8 on our charts, and that equals an all-time high for that index. Rally began back in mid-January, showing that there was some investor confidence in this index, contrary to the overall pessimism surrounding the strength of the Eurozone economically. Thursday morning, trading was around 79.61, so maintaining that increase and reasonably holding steady. Other European indices also registering equally strong rallies, whilst overall the economy does seem to be stagnating a little bit. Now, multiple opinions on why abound. One possibly tenuous explanation is strong overseas demand for luxury goods, particularly from places such as the Middle East and Southeast Asia. Now, it may mean strong company performance despite local populations reining in their spending. Obviously, luxury goods manufacturers are not exclusive to France, but some of the biggest are indeed French, such as LVMH, Louis Vuitton, well-recognised luxury brands. I'm sure you all know a few of them. These carry huge amounts of prestige. Just one example, obviously, LVMH. However, they are the biggest in the Eurozone with a value in excess of $500 billion. So quite a major player globally. And this is the point. Maybe this sort of reaction, the CAC 40, whilst within the Eurozone economies themselves are slowing down, it shows that today's market is a global one. And European stocks' performance seems to be testimony to that despite local issues, their global outlook is positive. Well, as I mentioned in the introduction, we can't get through a week without some form of inflation story. And this time it's the Aussie dollar and what's been happening to that off the back of the recent Australian figures. Wednesday saw the latest Australian inflation data released. CPI was actual with 3.4%. That was against an expectation of 3.6%, so came in under there, which we know in terms of inflation is a positive. Previous month's figure was 3.4%. In fact, the figure 2 months prior to that was 4.3%. So quite clear that there does seem to be a slowing down in the price growth rate in Australia. And that, of course, increases the chances of a rate cut. So what did we see? Well, thus we saw the Aussie dollar fall against the US dollar. If we take a look at the charts and technical analysis, that shows us that the price continues to develop in the downward channel that we're showing in red, and that the price has broken through the important level of support for the last week, which is what spot 6535. That may well now provide some resistance as it did back in the first half of February. So we can see that that level has been quite important. And in fact, in February, a bearish head and shoulders pattern was formed. We can see that quite clearly on the chart. However, bulls will look for some hope in the following. The psychological level of 0.6500. I mean, Thursday morning, the price was around spot 6498. So whether that holds or not is yet to be seen, but certainly bulls will be wanting that psychological level to hold firm. Also, maybe look for some support from the median line of that red channel. And further to that, there's some important support around the spot 647 mark. Thursday afternoon, we've got some US PCE inflation data published. Could well have an impact on the US dollar, as you wouldn't be surprised to hear. So volatility abounds at the moment, so don't forget your risk management techniques. Okay, thirdly, this week we're going to turn our attention towards commodities and Brent crude oil in particular. And in fact, Brent crude oil saw a bit of a sudden rally this week. That was off the back of being reported in mainstream media that OPEC plus countries may well, or are in fact are considering an extension of the production reduction they put into place back in November. We spoke about it at the time, and they reduced production by 2.2 million barrels per day, extensively to support and prop up the price of crude oil, obviously. Now, they're talking about they may well extend that into the second quarter of this year. Now, consumer fuel prices have already seen that sort of a bit of impact. They've been rising, so fuel at the pumps been rising over the last few weeks. And now we're starting to see that bleed across into the main commodity financial markets themselves. In fact, February the 26th, just earlier this week, Brent crude oil closed at $80.51 per barrel. On Wednesday the 28th, it opened at $82.24 per barrel. Quite a large increase in a very small space of time. In fact, this morning, Thursday, the 29th, this morning we're looking at around the $81.95 per barrel. So sort of holding up there, not quite at its peak from the earlier rally this week. There was no real indications from OPEC Plus themselves of how long these supply restrictions will remain in place. Thus, opinions do vary in the marketplace. There's certainly one school of thought is that they're trying to bolster the prices during a period of logistical and obviously political unrest and issues across the Middle East. We obviously know about the wars that are going on, etc. But of course, we have now this supply issue with various goods coming through the Red Sea. Thus, OPEC plus countries may well need to improve their revenue from their oil sales in particular to sort of balance out other economic concerns at the moment. As some analysts are speculating, I mean purely speculating, that these restrictions could well be in place for the whole of 2024. So it's going to be very interesting to listen to some of the discourse, some of the conversation coming out of these countries. Volatility certainly abounds. We saw that quite significant jump in a very short period of time this week. And of course, we do have these geopolitical concerns ongoing. And should OPEC Plus extend or even, and I'm just theorising here, increase production restrictions, we could see a lot more volatility in the price of oil. So again, don't forget your risk management techniques. Okay, so we're going to finish off as we often do with a look at a particular equity, and this time it's going to be the term of Amazon, and they've had a pretty good week. In fact, the Amazon price hits a 25-month high after its inclusion into the Dow Jones Industrial Average, or the US 30 as we call it. So as of February the 26th, Walgreens Boots Alliance, WBA was the ticker for that, has been replaced in the index by Amazon. So the WBA Boots Alliance had the lowest share price in the Dow Jones or US 30 index. Amazon has been added, or basically taken their place. One of the main reasons for that is to increase the Dow's retail exposure and to more accurately reflect the US economy. Also influenced this decision was the fact that Walmart themselves have done a 3-for-1 stock split. So a rebalancing, if you like. What does it actually mean? Well, let's take a look at the chart, and that shows that the Amazon price is moving in the upward trend. We're showing that in the blue channel. There was the strong report in early February that we discussed, and that chart clearly shows a bullish gap formed after that from 161.5 to 166.5. In fact, in the last few days of winter, we can say that this time of year, the price has approached the upper border of the channel. So the price is certainly in that upper half of the channel, and the median line has the potential to provide some fairly strong support. And we often see a short-term surge in demand for stocks when they are admitted to a new index. That's because index trackers, portfolio managers, etc., need to rebalance their old holdings to reflect what's happened. So that would all seem positive in terms of further increase or sustained increase in the price. However, it is perfectly possible the price has already factored in the rebalancing. It was known for some time it was going to happen, so those actions may well have been taken into account. And let's not forget, Jeff Bezos, according to corporate reporting from earlier in the year, intends to sell approximately 50 million shares this year. Now, he's previously sold a massive tranche of shares at $180 per share back in 2021, which then led to a bit of a decrease in the Amazon share price. And that may, it's only may, hold back demand for the shares at this point if people know a big seller's coming to market. Also, the bearish divergence on the RSI is starting to hint at a depletion of buying pressure. So there are indications both way in this case. And the average opinion on tip ranks, for example, is that analysts are forecasting a price of around $208 per share in 12 months' time. So contradictory information abounds. So do some research, keep your ears open, but certainly a positive for Amazon moving into the Dow Jones Industrial Average, our US 30, and clearly it's having a good week off the back of that. We wish you luck with your trading in the week ahead. Bye for now.